The future of the Iraqi dinar. Analyzing the latest developments and what they could mean. The Iraqi dinar, IQD, has once again become a hot topic of discussion, with growing speculation about its potential revaluation and the broader economic changes happening in Iraq. As anticipation builds, many are closely watching the dinar's exchange rate, trying to gauge whether this could mark the beginning of a significant shift for Iraq's financial future. Let's break down the latest updates and what they might mean. Rising speculation around the dinar's value. Recent conversations within the financial community suggest that the Iraqi dinar could be on the verge of a notable increase in value. Some sources, like well-known commentators such as Firefly and Mr. SEI, have floated predictions that the dinar may revalue to around $3.50 to $3.80, with the possibility of a managed float, where the currency's value increases gradually, potentially rising by 10% daily for a set period. Mr. Sammy, another respected voice in the community, has speculated that the dinar could reach a ceiling of about $4 before stabilizing. However, he has been clear that these predictions are based on available intel and educated guesses, not certainties. The unpredictability of currency markets means anything is possible, but the underlying optimism stems from Iraq's ongoing economic reforms and efforts to strengthen its financial system. Why is there hope for a dinar revaluation? The belief that the dinar could climb back to the $3 range isn't just wishful thinking. It's rooted in historical context and Iraq's current economic strategies. Historically, the dinar was once valued at approximately $3.22 before political and economic turmoil devalued the currency. Many now believe Iraq is working to restore its currency to a similar level, aligning with its broader goal of modernizing and stabilizing its financial landscape. Iraq's long-term economic plans focus on boosting its infrastructure, expanding trade partnerships, and reducing dependency on the US dollar, all of which could support a stronger national currency. If these reforms continue to gain momentum, the dinar's value could rise naturally, reflecting the country's improved economic standing. Real-time fluctuations and market volatility. Adding to the excitement, reports from Bruce Y7th and his team claim that the exchange rates for the dinar are already appearing on financial screens with noticeable fluctuations. This market volatility is a significant signal. It suggests that Iraq's financial system is moving and adapting rapidly, potentially foreshadowing a larger shift in the dinar's value. For investors and currency traders, this kind of volatility presents both opportunities and risks. While sudden increases in value could lead to profits, the unpredictability of the situation means there's also the potential for losses. Staying informed and monitoring these changes closely is crucial for anyone involved in the dinar market. Challenges with Iraq's banking system. Despite the optimism, there are still challenges to navigate. One key issue is Iraq's parallel banking system and the presence of a shadow economy. Financial activities and networks that operate outside official government oversight. The parallel banking system often involves unregulated financial channels, while the shadow economy encompasses transactions that don't pass through formal institutions. Both pose risks for investors and complicate Iraq's path toward a modern, transparent financial system. The Iraqi government and the Central Bank of Iraq, CBI, are aware of these issues and are pushing to integrate the country's financial system with global standards. What if the US cuts off Iraq's dollar supply? Another pressing concern is the potential for the US to reduce or cut off Iraq's access to the dollar. While this might seem alarming, some experts view it as a catalyst for positive change. If the US restricts dollar supplies, Iraq could be forced to accelerate its shift towards a new currency system, known as the RUA, which is part of a broader plan to reduce reliance on the dollar and strengthen the dinar. Such a move could actually benefit Iraq by encouraging economic independence and stabilizing its currency in the long run. There's growing speculation that this transition could push the dinar's value past the $1 mark, a milestone many have been waiting for. While the exact timeline remains uncertain, Iraq's shift away from dollar dependency seems to be gaining traction. Modernizing Iraq's financial infrastructure. One of the most significant recent moves by the Central Bank of Iraq is its push to modernize the country's banking system. The CBI has set a deadline of June 1st for local banks to settle electronic payments. But with a twist. Banks must have accounts with major international institutions like JP Morgan or Citibank to continue processing transactions.